Welcome to Momentum Monday. Today is April 26th, 2020. Howard is still quarantined. Howard, how many barrels of crude oil are you storing right now?
Not enough. One day crude will be back. It's chaos, right? Like no one had their models built for this. So it's a lot of people became crude experts. I prefer to not care what's going. Digital, the cloud is the crude of my generation. And so, that could be the title of a book, Cloud Over Crude. Ooh, that could be the title of the show, dude.
Sure, absolutely. At least of your title, yeah.
I just wrote your goddamn title. I got to do all the work here. You're looking fit.
Getting there. Not the same level as 2 months ago, but it will take.
Oh, really?
Yeah.
Can't do your prison workouts in your apartment?
Oh, I bought a bunch of weights and stuff, but it's just not the same.
Yeah, but I had a 50-mile ride this morning.
That's incredible. Good for you. For your age, that's incredible.
For my what?
For your age, yeah. I know you're young. Just kidding with you.
I would say yes. For my age, it's actually not bad because I'm running with a pretty fit friend, and he was only keeping up with me because he was embarrassed. But I would say 95% of people I pass. It's not, so there's still 5% of people that kick my ass. Like they go by you like you're standing still. Okay, it's kind of like the market.
All right, so the market continues to live in its own world.
It really does, right? Like the cloud is its own world, right? Like the people, it's not luck it's a part luck, but it's the economy, right? There's a cloud economy and the world needs their food and supply chain on the cloud. And it kind of doesn't, in hindsight, it's not crazy that the NASDAQ or parts of the NASDAQ are near all-time highs.
The NASDAQ is basically flat, even a little bit up for the year, for 2020, after a 30% gain last year.
But if you take out Facebook and Apple, because they're probably down on the year, the NASDAQ's probably up because those are such a big part of the NASDAQ. And because they're advertising and so much reply on China for Apple, if you took those two out of the NASDAQ, I think the NASDAQ would be at all-time highs almost.
Well, they're only about 5% each. But yeah, if you take Google and Apple and Facebook, yes.
Right, because they're such a big component of it. And so they're more old economy still because of the advertising and because of the supply chain. But you can see they're still, for the size of Apple to only be down 15% from its highs, and when a global shutdown, I don't know, something makes no sense to me. So I've been switching out of Apple into other, cash.
Yeah, we will know more this week because we have several of the big ones reporting earnings, including Apple and Google and Amazon and Tesla and AMD.
I just think Apple will no longer be my biggest position. It's been that way for years. For me, it's too tied to the global economy, and it's heavy out there. The GDPs just across the globe is going to be tough for a long time. And Apple's a great company, but this is a great bounce in a bear market. So I think you really have to get digital with how you think. So keep going. Sorry, Ivan.
Yeah, the market continues to be forward-looking and basically saying that 6 to 12 months from now, maybe things will go back to normal, or at least some things. We are already starting to see two new big leading sectors. And last week we started with biotech.
Yeah, that one's fascinating.
Because
even Biogen got ripped and the index is at all-time highs. So if you look at Biogen.
And the indices, the IBB, the XBI are just near all-time highs or breaking out near all-time highs.
Yeah.
And
which one do you prefer? For what reason? Do you have
I prefer XBI because it's more diversified and it owns more of the smaller and mid caps. Therefore, it has more potential. And also it's the one that is, it hasn't broken out yet, but it is near all-time highs unlike IBB.
Oh, go to IBB.
which is a little bit below, and both are looking very similar.
I like IBB better, and here's why. But again, I don't want to be that diversified into small caps. I think but anyways, look at Biogen went down, and that's a big part of the index, and it still is right there.
Yes, and it's just consolidating its gap. I mean, just incredible action in the biotech. That's why I think that that's
a pretty big gap down, though. So for the index to still be strong, that's got to be. It's a bummer for me because I don't know anything about the companies in the index really, and but you can't deny that the strength is. And it makes sense in a world of coronavirus and aging populations in so many countries. Same thing with IHI, Ivan. It bounced very strong, medical devices.
Yeah, the whole healthcare industry has been acting well, but biotech especially, I think the work and the market.
I just prefer medical devices just because they have earnings. But I hear you. Yeah, like the biotechs you can't be, and then there's XLV, which is the healthcare, which is also.
Yeah, definitely a little bit better than the S&P 500. But the market has basically realized that the world will need a lot more investing in the biotech sector for the next year or so. And I think we might be at the beginning stages of a significant uptrend in biotech, and we might see something similar to what we saw between 2012 and 2014 when it just went on a huge ramp.
Problem is, if everybody's broke and can't pay and the healthcare system's kind of broke, it's not going to be as simple. It's never the same.
Definitely, that's the wild card here.
I was hearing today, Ivan, maybe Wall Street Journal, someone sent me a link that 30% of the restaurants that are closed will never open again because it's been 2 months. That's crazy. So supply chains are just, some of my favorite restaurants here just can't open because they can't get their industrial kind of orders in. Some breakfast places and that would even just do takeout. So I think there's a lot of chaos under the surface. But McDonald's, I went to McDonald's, pull up the McDonald's chart, because I mean, Domino's is obviously the easier one. McDonald's has all the leverage in the leases, but I ordered a coffee and a breakfast burrito on my ride, and a guy came out with a bag, and I was on my bike, and he came out to the parking lot and gave me my food. And so, it's harder for McDonald's to be able to pull off in that quickly in parking lot delivery and their drive-through. They're fully at this point digital. They have the mess of leases that they got to deal with, but between them and Starbucks, we know who's going to win, right? Domino's, Starbucks.
Well, comfort food has done really well during the lockdown. They probably gained share.
Like Chipotle's, you mean?
The Chipotle's, the Buffalo Wild Wings, all the barbecue places, and anything.
I didn't wing their store. How is that even possible? There's no sports. That's fascinating.
It's like people are ordering home, I guess. At least that's what the market is betting on.
It went from 40 to 110. That's unbelievable. Okay, yeah. I missed that one.
Yeah.
Wow. Wowzer. Is that Buffalo Wild Wings, Wing, or Wingstop?
Wingstop. I think someone acquired Buffalo Wild Wings.
Wow.
So the other big trend that might be starting, and we've been talking about it a lot, is gold and gold miners just breaking out. I mean, gold miners just broke out from a very long 7-year base last week. So 32 was a very big level for gold miners.
I own a little GLD, but my heart's not in it.
On a monthly, and that's a significant breakout. And as of right now, maybe 32 will become now 31, 32 will become support.
Mm-hmm.
It pulls back.
Bitcoin, Bitcoin too is holding in there.
Well, it's basically the reflation trade. I mean,
I prefer Bitcoin just because it's not a crowded trade and there's not endless supply like gold. But the volatility will be higher in Bitcoin. But yeah, I own a little GLD. How does GLD look?
Similar. Setting up near building a huge base, and with all that stimulus money pouring into the economy, and the market is basically betting that
It feels like it'll get above 200. It feels like it just feels like the economy was shut down too long. It's just, by the way, some of these kids will make more money from their unemployment than they will from going back to work. So, I mean, it's like,
some
yeah,
people
it's
don't have any incentives to look for work right now. So
crazy. Like, it's like you can go get it's not a lot of money, but like if your parents are supporting you, and if you, so a lot of stuff's going to have to be reinvented, and there's going to be a lot of new service type small business and franchises started. But that's going to take a year or two for people to get momentum building these small businesses and getting loans. So I'm kind of optimistic on what you showed, like biotech, certain restaurants, and digital. But at the same time, with the GDP, with general spending down, and even with low travel, like it's harder to close sales. Zoom's great, but it's harder to close sales. So I think you got to be real careful. And breadth, I'm hearing from a lot of the technical guys, Ivan, is still pretty weak.
Yeah, I mean, you can make the argument for that, but it's improving overall, and there are more and more stocks setting up and going above their 50-day, above their 200-day moving average. And as of right now, I definitely see more long setups than short setups, and more importantly, long setups have been the one that are working better.
Mm-hmm.
And I mean, and they come from various sectors, as you say, biotech, healthcare devices, even some energy stocks are doing okay compared to where crude oil is.
And then what some names that you're looking at?
Biotech mostly, because I see so many setups in the biotech space. So many of them are just setting up near all-time highs, or have already broken out. They're just a lot of strong setups.
I got 8 to 50.
Wow. Anything related to gene editing is also starting to look kind of good.
Yeah, TRSP is my only. I own a little just to keep an eye on the space, and it's actually it's firming.
Just there are like 300 stocks in the biotech sector, and you probably find 30 good setups. Even marijuana stocks are starting to look interesting.
I know. It's like Bitcoin, weed, and marijuana. 3 things I don't use are strong. Yeah.
Definitely. Look at this one, SMG, which I think they provide.
Scott's Miracle Graph. Wow.
It's a very interesting setup near all-time highs, probably.
Oh, that's an incredible setup through a bear market. It's like, that's what they do. They whip back. They like, and now they could run. That could run another 20, 30%. Yeah.
And what was the other one? GWPH. It was like /biotech /cannabis play. Also kind of small bull.
It's not the best looking setup.
Downtrend, but yes, from a swing trading perspective, is interesting. As I said, in the biotech sector, there are probably 30 or so setups that are looking okay right now.
Yeah.
I mean, speaking of,
I'm too old. But anything else that looks good?
There are so many of the enterprise software stocks that are looking good. And JP Morgan came out last week, and I think they downgraded.
Atlassian, everybody using it.
Actually, a slight gap down in the enterprise software names. It was quickly bought. I mean, the market, those stocks cannot sell even on bad news. We saw
the high flyers are still are still at 2018 prices. They're just longer sloppy bases here. AYX is like a great company, but
incredible. Very high valuation, which is, I think, is a big threat, because we know that companies are slashing costs, so it will be felt in the bottom line.
I see it. I got 100 startups. I see the costs being slashed, and this is not going to happen. There's not a V shape.
You should be careful of chasing those late stage bases. I mean, yes, they look incredible. Look at Team, for example, but just keep in mind that
there's
there's
going to be a lot of companies that use them going out of business. There's going to be a lot of companies starting. You can tell that this is going to be a leader for a long time, but you're not going to get the same pop in these names that you used to get. So you got to find some really lean new, fresh leaders coming out of this. And I just also think we've had a great rally. So people, you can be fooled by great setups, but we're still on the indexes coming into major resistance still.
Yeah,
and,
absolutely. You can.
And earnings season, there's 800 companies in the S&P report this week.
Yeah, definitely big week for earnings. And I'm keeping an eye on emerging markets because I'm thinking with the strength in the US dollar, they are a lot more vulnerable than the US markets and European markets. And
the US dollar does look like it's ready to jihad a little higher here.
Yeah, and the higher it goes, the more dangerous it will become for emerging markets. And I mean, we saw that huge drop in Brazil on Friday, down 10%. Obviously, they have their own reasons for that. In their president is kind of accused in corruption, which seems to be the news every 2 years out of Brazil.
Yeah, you can just see there was no bounce in my venture capital Brazil ideas, Stone and Pags and IXP. They're just right. They just can't get a lift. Just the economy, there's something else going on there. And you see it in the retailers here, SPG, which I keep pulling up. It's my barometer for is retail dead? Yeah. And it's pretty dead.
Yeah.
I mean, that's acting like it's going to zero. There was, that's now 6 weeks in the hole and big volume. This is a stock I'm watching at. This is not a small thing. Yeah. This is not a small thing. And I know it's not a name that most momentum people look at, but you have to look at this. You've got this divergence. Lulu holds the cards here, right? Like Simon's a great, that is the brand, right? We're like, and the financial crisis. So pull that up, Ivan, again, the monthly. This is what worries me about.
Which one?
The Simon monthly. What worries me here is 2008 was a financial crisis. We get that. E-commerce was great, and Simon came back along with e-commerce. But this time around, there's not really a financial crisis yet. It's a medical crisis, a healthcare crisis. The financial crisis may begin later this summer when people just say, "Fuck it, I'm going to throw in the towel, not go back to work, and not hire back my 20 people or 40 people at my extra Coach or Gap store." And so, we're getting down to 2008 lows, and we're not even in a financial crisis yet, right? Government sending out checks. We can make fun of it and say they're not doing a good job sending out checks, but checks are being sent somewhere. And so we're not really in a financial crisis, right? There's not a leverage crisis. It's just people not spending. And that worries me. So I think people need to watch some indicators that they didn't used to have to watch, one or two. So that one for me is interesting because they're going to have a lot less leverage with retailers coming out of this. Okay, so biotech, yep.
Gold miners are also tech, especially strong. I think for me the leading indicator is the semiconductor index SMH. And it's acting constructively above its 250-day moving average.
Yeah, but 2 bad days, Ivan, and that thing doesn't look constructive, right? Like that's how iffy it is.
Absolutely. Yeah. But
like 2 good days is great, but 2 bad days and then a whole fucking month is wiped away.
Two big distribution days, the picture will change, but this will be early.
So I just think I think what you're like, you got to give it a week here. Like if you got positions on great, I just don't think this is the week to be making big decisions.
You need to remain nimble. I mean, I'm nimble. I'm a swing trader. Sometimes I even intraday trade. So, I mean, I'm not making some long-term commitments. My point is that the SMH was the first one to bottom 5 days before the other indices, and it kind of led the market higher. And
I'm a little skeptical. I agree with you. I'm just a little skeptical. You got the tariffs still in place. You have GDP slowing. China's not really open. It's kind of quarter open. US is like, you can't just turn a switch anymore in the US. Like you just can't, right? Like people have just been hunkered down a little longer than they need to. And I hate being negative, but I'm trying not to be negative. I'm just saying a couple bad days in the markets and none of these formations look good right here. And that's what I'm worried about.
You have all the reasons to be bearish. I mean, there are definitely 95% of the reasons are on the bearish side.
No, but so many people are bearish, but sentiment is so bearish, Ivan. That's what I'm saying. I hate
That's a good thing that you have
Well,
higher.
that's what I'm saying. I don't want to be bearish with everybody else, but there's a lot of smart investors that I know are just now on this rally getting bearish, And I think a lot of people will be happy to be break even down 5% on the year, where, a lot of the portfolios, if you're a 50-50 portfolio or 60-40, you're only down 4 or 5%. And a lot of people will say, you know what, at the risk of, so there's still a lot of potential selling by people who just were like, throw their hands up.
Yeah.
In the 60-year-old, 70-year-old, a lot of smart people are just saying, you know what, I'm 60 and 70 years old, and I'll go, and bonds are zero, so I'm going to go high cash. The case for digital, Ivan, is a lot of the, like, if we look at like a Zoom or DocuSign, Zoom is going to be very volatile, right? Because everybody's shooting for it. But if I own 100 apartment buildings, am I going to go buy my, even if the economy recovers, am I going to put 10% of my, instead of buying 10 more buildings, I may just ask my advisor to give me take 10% and give me digital assets and take the volatility for the liquidity, right? Like, these survived a global shutdown, some of these brands. And so I think you will see just another group of 10-year leaders coming out of this. And so some of these could surprise even on the upside still. That's why I'm not like full on bearish, because, valuations aside, people that are in real estate may start taking some capital out and putting it into the markets just for the liquidity.
Yeah, I mean, definitely make some good points that some people will do some shuffling of their money, but also you have to take into account that there is a lot of FOMO going on right now. People who missed that initial leg up, and also money managers who are underperforming, they just might have to participate. And as I said, for my leading indicators, I'm watching SMH, and I'm also watching emerging markets, because I think if there is another leg lower, we will see those dropping first.
Yeah, and you'll see the airlines drop and you'll see the banks drop if the emerging. You'll see a lot of this drop, because if rates keep down, banks can't make money with zero interest rates or negative interest rates, and it looks like we're going to go negative interest rates. So I think the financials are another one to watch here. No lift, right? I mean, those were looking great for you. There's just no lift, and the government's putting the hammer to them to just send money out to people. So. All right, Ivan, we'll check in next week, but this is a big week. I think people need to check their portfolio and continue to do some gardening, and to continue to realize this week is like a lot of your companies in your portfolio are reporting. So,
yeah, I agree. We learned a lot about market sentiment this week based on the reactions to earnings. Last week, we saw that IBM, Intel, Target, they came in with worse than expected numbers, and they gapped down, and those gaps were quickly bought. So market's definitely buying all dips right now. So sentiment is so far, I think, bullish and positive. Let's see if this will change next week.
Yeah, I think, like you said, Ivan, there's some FOMO and there's a lot of liquidity. And so on the edge, people are still buying dips right here from these lower levels. All right, have a good week. Be safe.
All right, you too.